Welcome back. This week marks the 5th anniversary of the legalized cannabis market in Canada. Here's a look by the numbers. The cannabis sector is valued at $10.8 billion, according to StatsCan, an increase from $6.4 billion when non-medicinal use pot was first legalized. 70% of cannabis users said they got their pot from a legal source in 2023, up from 22% at the end of 2018. Cannabis use in Canada doubled from 5.6% in 1985 to 14.8% in 2017, the year it was legalized. By 2021, it had risen to 22%. Recreational cannabis sales in Canada were $4 billion by March 2022, or $131 per person of legal age. The highest rate of consumption was in Yukon at $291 a person, while Quebec had the lowest at $89. Dried cannabis remains the product of choice for 71.1%. Inhaled products account for 18.1% and edibles 4.1%. As the cannabis market matures in Canada, the hype is definitely giving way to a more solid reality. So what lies ahead? George Smitherman is president and CEO of the Cannabis Council of Canada. George, thanks for being with us.
My pleasure.
I think it's fair to say that the kind of idea of how big this market could get, we've kind of right-sized that a little bit. What would you say is the sort of biggest constraint to growth for cannabis in Canada right now?
I think that the cannabis market will continue to grow because we've got still quite a bit of legacy market to capture, and there's quite a few international export opportunities as well. That having been said, your comment about right sizing, that's certainly going on both amongst those cannabis retailers and amongst the cannabis producers that I represent.
So there was, whether it was public companies that had huge valuations for a while or just a flurry of people buying up the rights to open up stores, it does feel, to some people's pain, of course, people have gone out of business, et cetera. Do we have the market we should have now, George? Are these the right players for this market right now, or are there still too many of them out there?
Well, I think that, the market will make those determinations as we go. We're very focused on the situation, which is that even if you happen to be a company that's selling everything that you produce, there's still a really strong chance that you're not near profitability. So the circumstances that we see after 5 years is that fewer than 20% of companies can produce profitably. And the underlying reality of that is that producers, small, medium, and large, who are very well distributed across all regions of the country, still face extraordinary risk of closure and the like. So we're really focusing on the fact that the playing conditions, even if you're commercially successful in the sense that you're selling everything that you produce, isn't necessarily producing any discernible capability to pay back the $45 billion worth of capital investment which occurred to build out the sector just a few years ago.
How much of that is the price of cannabis, which is less than some had predicted, and how much of that are the taxes that get taken out of that price by governments?
Well, the sad thing is that the tax hangs in there at $1 a gram, no matter what the price is. That's actually our fundamental problem. The price was predicted to be $10 a gram. The tax was set at $1 a gram. The tax is still $1 a gram. The price is $3.50 a gram. You see the conundrum. So the density of the excise tax is really a fundamental challenge for us. And managing that tax with all of those stamps that people have seen is also a really expensive operational model. So the combined impact of those things is really holding people's progress back.
How much will the opening up of the U.S. market affect Canadian players?
Well, a lot of Canadian players are, in a sense, exposed to the U.S. market, so it's more likely to be beneficial than anything. I'm really impressed with the array of Canadian companies, including ones that are quite small, that are finding medical cannabis export markets to places like Australia. Israel was a significant market. Obviously, there's some disruption there at the moment, Germany and the like. So Canadian companies are really, in a certain sense, very well positioned to be the leaders of the expansion of the medicinal cannabinoid markets around the world. So there are some potential there, but the fundamental economics make that profitability practically impossible at the moment.
So good to have you for this, George. Appreciate your time.
Anytime for you.
George Smitherman, President and CEO, Cannabis Council of Canada. Time for the takeaway and our addiction to sin taxes. On the anniversary of legal cannabis, it's as good a time as any to reflect on how much our governments rely on taxes from the sale of products like pot, alcohol, tobacco, and lotteries. So-called sin taxes, every product legal but best consumed in moderation by adults. They raise tens of billions a year for governments, both federal and provincial. But before we shrug and say, why shouldn't the government take a piece of the action if they're going to take a slice of shoe sales or a night out on the town, the answer is that these taxes carry a certain moral weight like no other tax does. Too many of the consumers of these products become less and less voluntary. Many are addicted to a varying degree. Some are addicted to the point of ruin. Is it ethical to make more money off someone who lacks control over their behavior? It's hard to call the tax a deterrent when the antagonist is the user's own brain, egging them on. So that instead of just helping to create a dependency, and here governments are all in with slick marketing campaigns encouraging the use of the product, it adds a financial burden to the consumer who may already have forfeited control over their behavior. Shrinking from government enriching itself off a sin tax is not to be confused with wanting to get rid of the products or even the behavior. Legal pot keeps many people out of a criminal system they have no business being in. And alcohol is a genie that is well out of the bottle, never mind what we know about its universally bad effect. Adults can and will engage in risky behavior so long as they harm no one but themselves. But should others benefit from that behavior? When the other is the rest of us, it's worth taking a minute now and then to ask the question. My takeaway? Governments have a duty to all citizens, which can be hard to live up to when they rely on taxes for products that harm some. That's Taking Stock for this week. I'm Amanda Lang. Thanks for being with us.